Hi there, this is Cjlqallc with CJL Quantum Analytics LLC. I am an investment advisor to my investment advisory firm. I'm also happen to be a CPA and have an MBA in finance. 4 years of graduate finance. Anyway, I spent most of my time as a banker. I was in banking for approximately 26 years, 10 years as a regulator, 10 years as a bank officer, community bank officer, and 6 years as a consultant. Today, as an independent investment advisor rep for my business, I try to focus on the banking industry. That's my true love. And so, although I can help out my clients with their retirement planning and investing, give them guidance on how to invest their funds in their retirement plan based on the economic business cycle, which is effective and works. And it's based on the statistical analysis that says certain industries do better at certain times in our economic business cycle. Okay. And so it helps you to invest at that in that cycle and what industries do best and what perform better at that time. So that's what I do, and it's effective, very effective. And so that's how I manage that. But my focus is primarily on banking. I grew up in banking, cut my teeth in banking. I love banking, and I like to consider myself to be a bank financial manager, in particular community banks. That's maybe not so much with the money center banks, but with for as a community banker, I can show you how to make money, how to value your business, and from a finance perspective, and help you manage it against interest rate risk, how to improve your net interest margin for a community bank. That's how you make money is through your net interest margin. For money center banks, it's about a 50-50 split between that and fee income, fee generation. So, so for community banks, may mostly make it through the net interest margin. I can show you how to enhance that net interest margin um, through different types of strategies. And because I know the ins and outs, I know how the cause and effect, I know how it works, and so do that, and also help you to protect and insulate your net interest margin or your net interest income against and your equity against fluctuations in interest rates. And that's what interest rate risk is. So I can show you how to do all that and how to financially manage your business, your bank, community bank. So if I can help any of you out there, if you're a director of a board of a community bank, I can help out your bank and I can help out senior management, the CFO, bank president. I can do projects. I can evaluate your interest rate risk model, things of that nature. And I would love to share my knowledge with you for a price, of course. And I'm reasonable though. That's um that's how I do things. I charge a reasonable rate for my services. But in the meantime, let me tell you more about what's going on in the banking industry. I looked at today. I looked at the sector, looked at our sectors in our economy, and most of them are down today. Okay, so and then if we look at if we looked at money center banks, 60% or excuse me, 2/3, 67% of them are up today, and 1/3 is down. So sorry about that. I was my granddaughter, 5-year-old granddaughter, the love of my life. My wife is my best friend, and the two loves of my life are my wife, Linda, and my beautiful granddaughter, Ariana. And so she just came to say hi to me. Her and her grandmother went out shopping for me. It's my birthday today, so we're going to have a little celebration here in a few minutes. But I just wanted to give you my take on what's going on in the banking industry right now. I just read the comments made by Treasury Secretary Benson. By the way, a very smart man, and I would take what he has to say about the economy over the Fed chairman any day. Okay. That's where my money lies, is with the Treasury Secretary. Very smart man, smart man. So listen to what he has to say. And I read his remarks today, and he was saying how since I believe 2010 that the banking industry has declined by close to 50%. Like 3,500 banks have disappeared since then. And what he means by that is that they've been gobbled up. Maybe some have been closed down, a small percentage, but most of them have been bought out by a bigger fish, a bigger bank. Okay. And which is normal for the banking industry. It's been consolidating since my career started. I started out as a bank examiner for the Office of Thrift Supervision in the Midwest, 14 state area, and we had um, I don't know, over 1,200 savings and loans in the Midwest. And I was there almost 7 years. And then that 7 year period, I survived four reduction in forces, and our number of institutions had declined to a few hundred, maybe 400 or so. So, but this has been going on for a long time. And some would suspect it's by design. It's harder to control the economy through the banking system if you have so many players. But let's look at our money center banks. They hold the majority of deposits, 80+% of our deposits in this country, and that's truly how the Federal Reserve System would manage our economies, through those money center banks. Now, I haven't looked at the latest statistics. It might be higher than that. It might be over 90%. But I know this, that the number of banks has declined drastically. And according to Treasury Secretary Vincent, 50% since 2010. So, and again, those banks are going to be swallowed up or acquired by bigger banks. Now, what does that say? That gives an opportunity for investors. Okay, so if you acquire another bank, it's going to help your bank out financially, especially if you negotiate a reasonable price. But the acquired bank is going to be purchased normally at a premium. So if you can find out the banks that are primed to be acquired by another bank, as an investor, that's going to help you out. Okay. I personally think it's a win-win. I think the acquired bank and the acquirer will both profit from the acquisition process. Okay. So again, if we look at banking today, right now, um, the time to be in banking during the economic business cycle is in an expansion stage. So when we get past this stage, we're at the tail end of expansion, where we're close to getting into a recession. That's where we're at right now. But are we going to go into recession if Trump is able to turn the economy upwards? He's making progress. He's getting our foreign trade partners to play ball because he's the threat of a tariff. Let's face it, the United States economic domestic market is the largest in the world. We're represent 20 to 22% of the world trade. Our domestic market, U.S. market. China is about 10%. So they're the second largest at roughly 10%. And then the rest of the countries, like Japan, for example, those type of countries are come after come after China. So so Trump is correct. We are the most we're the strongest economy, and um, everybody, domestic players and foreign players, want a piece of the pie. And he's correct in leveraging that to make things better for the United States of America. And I applaud that. And I hope he's able to continue that and see it through. So we may not go into a recession if what he's doing is working. If he's able to get foreign investment to come in here and invest in building plant and equipment, that type of thing. The big thing now is AI, these data centers, and the power plants, miniature power plants, the feed the electricity that's going to be required to run these millions of processors. So, you know, um, definitely something to look forward to. I mean, as me as an individual investor, I invest in banks, but I also invest in technology stocks, and so definitely have profit from Tesla. I have profited from just recently sold AMD. Now, AMD could quite possibly go, continue to rise, but you can't be an investor if you're going to get greedy and try to get every last dollar. What you want to do is buy close to the bottom and sell close to the top. And so I promise you, if you do that, you're going to be a very successful investor. So, but today, talking about the money center banks, like I said, 64 of them, there's six of them. Four of them were up. The two that down were Bank of America and Citigroup. Okay. And those two happen to be close to an annual lows. So that is something maybe you want to look at that might be something worth investing in just because they're close to an annual low. Bank of America, Citigroup, and Wells Fargo. And these are just rules of thumb. And well, excuse me, I was looking at the day range. Their day range are their 52 week range. They're close to their highs. So I apologize for that. I'm off a little bit there. So um, I wanted to retract that statement and say um, it might be this is probably not a good time to invest in the money center banks because they're close to their highs, 1 year highs. I'd feel better about that if they were close to the 1 year lows, but that's not the case. All right. And then if I want to look at, let's see if I can pull up some more statistics on them. Right now, the price of earnings are somewhere between 13 to 19. So those are higher than I would like. I don't know what the price to book is right now on these on the banks. Um, Anywhere from zero point 0.9 to 2.5. So my granddaughter's here, so I'm gonna take a time out just for a second. All right, sorry about that interruption. I just love my granddaughter, so I'm gonna make time for her and my wife. So anytime they want to interrupt me, that's fine. So um, price earnings are a little bit higher than I like. Price price to book is in normally it's 1.5 for a thrift, but for a bank it should be at least two, if not 2.5. And so there might be some opportunity. That might signal there's some opportunity. So for example, Citigroup is at less than one, so it's at 0.9. So these are rules of thumb again. And so Bank of America is at 1.3 and Wells Fargo at 1.56. So the other ones are over two. So I'd say without doing any fundamental analysis, um, any um, analytical analysis that I perform, I'd say on the surface I would be looking at Bank of America, Citigroup, and Wells Fargo as potential acquisitions. Okay, let me look at their performance real quick here. Oh, looks like I can't get to that. All right, so we'll just back up here. I'll get to another section. Okay. Um, if I look at dividends for sure, the dividends range in the three that I mentioned, $1 to $2. In those three that I mentioned, and the dividend yields are going to be two in the 2% range. I'm not sure what the payout ratios are. Um, just estimating it right now, looking at the earnings per share versus dividend per share, looks like to me we're talking in the I like to see 50%, but these three are paying less than 50%. Okay. Again, the price of the book in these three stocks is anywhere from point 0.9 to 0.56, 1.56. Okay. All right. So that's where I'd be looking if you're interested in buying money center banks, stock on them. I do analysis of money center banks, but I also look at community banks, smaller banks, regional banks. Okay, so let me look one more time here. All right. And more recent volume, uptick in volume in those three stocks I mentioned. The price to earnings is in the 13 to 14 range, price to earnings, past 12 months. Again, price to book is from point 0.9 up to 1.56. Okay. One more look here. I'm gonna look at a long-term analysis here. Again, this is a quick and dirty analysis. I do an in-depth analysis and review that I publish, published information on at a premium. Okay, yeah, so I'll stick with that. So those are the three I would look at on the money center banks. I also look at regional banks and community banks. So something to keep in mind. You can always contact me at 916-952-2691. And I can do, if you want me to do some individual analysis, I can do that, but I charge for that. Okay, so that's it for now. Again, we are close to, if you look at the economic business model, we're close to a recession, but that recession might be short-lived. It may not come at all because of what's going on with President Trump's economic initiatives. So we'll see what happens. So I'm going to say my goodbyes until next week. I'll be putting out these presentations, these speeches, these called a podcast. I put out this information once a week, and we're all look at the economy and the banking industry. Again, my name is Cjlqallc. I'm a investment advisor rep, CPA, MBA, investment advisor rep for CJL Quantum Analytics LLC. If you need to get a hold of me, contact me at 916-952-2691 or my email cliff.liker. That's Leikr. cliff.liker.cjlqa@gmail.com. God bless and enjoy your week, rest of your week.